Hi there, Mark Sebastian here, founder of OptionPit.com, and this is the Option Pit video blog. Reminder, this is for educational purposes only. Anything here should be consulted with your financial advisor. Basically, if you lose money, it's your own dumb fault, not mine. So let's talk about the market. I think the big piece that I want to point out is what we've been seeing the last couple of days, and that is just the way the VIX has really vastly outperformed the S&P 500 on sell-offs and vastly underperformed the S&P 500 on rallies. So if I pull up SPX, you can see big up day, right? Up 1%, have been up as more than that. Two back-to-back big, nice up days in a row. But take a look at 2 days of volatility here. And you tell me what you're seeing. All right, we're all the way back to kind of where the high of the day on the 11th, or maybe the low of the day on the 10th. And you see the vol still trading a nice little premium to where that was. All right, so the volatility is just bid, and they're buying everything up. And if you look at a 3-month chart, you can see since kind of the bottom, or kind of the top down here, volatility has just been kind of on an upslope. It's not perfect, but it's clearly on a trending upslope. All right, that's a sign of something. Even the complex itself, DECE is DECE. It expires tomorrow, but the whole complex is kind of sitting on top of itself, flipping around from backward to forward. The VIX cash is a couple of points over January. Now, part of that is the Federal Reserve. I think a lot of people are interested in the Federal Reserve, but I think it's also indicative of kind of what's been going on at the market and how the market's been moving. In addition, VIX volatility remains high. VVIX, 115% still. All right, that is not cheap. All right, that volatility is pricey. All right, it's about as high as it's been since the end of September. So just be aware of kind of what's going on here. Volatility is high. There is, whether you think you know what's going to happen or whether you don't, there's some real uncertainty around tomorrow. Now, you probably want to know my take. My guess is that initially when they raise rates, the market sells off on the headline, and then as people read, and they're going to write it in such a manner that points toward, rates being still below 1% potentially next year, or at the most 1% by the end of next year. Well, then you're now talking about something that is probably a little more dovish than the market is expecting, and I think you could see the S&P move higher and volatility make another run at that 15 level. Now remember, 15 is the new 12. So how would I trade it? Being aware that my hedge fund does play in VIX a lot. I like the idea of maybe going long an S&P 500 straddle and short VIX against it, or long S&P calls, long VXX calls, long S&P put, long VXX put. I like all of those plays potentially. If you're saying, Mark, that's too complex for me, I'm a simpleton, what should I do? Maybe look at a bullish out of the money butterfly in SPY, maybe something like so. Go out to, let's look at a week from Friday, going into Thanksgiving, and we'll set it up at, the way I might set it up, just seeing where the premiums are laid out. I might buy the 2009s, sell the 2012s, and by the 2015s. All told, if I do that trade, it's going to cost me about 36 cents per butterfly. I think the risk reward there, that works out. That might be a trade I might do if tomorrow, if things line up the way I'm expecting them. All right, folks. I hope everybody has a great afternoon. Reminder, check out our YouTube channel. Just go to YouTube and search Option Pit, and you can see all sorts of awesome content from us. All right, old webinars, all sorts of interesting things that we've done. All right, and or you can just go subscribe to our channel. We already have 530 subscribers. You be the 531st. All right, folks, have a great day, great evening. Talk to you soon.